choice. Either we can. Oh, so Jeff, would you like to introduce yourself and tell a little bit about your background? And I know you've been involved in the tech space in New York since the very, very early days of Web 1.0 when you started your first company in your bedroom, which was acquired, by the way. Or do you want people to introduce themselves first? Either way.
Sure. Well, I'm happy. I'm happy to. Why don't I go last? Maybe if people want to do a quick intro, and then I'll dig into the background.
Okay. Great. So Shahar, it's all yours.
Okay, cool. I guess I'll kick us off. So I am a two-time tech founder, former Wall Street guy, and went to UPenn for UPenn alum, did my MBA. My current startup is one that I guess Bonnie knows of. We just launched it about 2.5 weeks ago, called Superstars. And the idea behind it is that it is a professional network, meets Instagram and TikTok. So it's the first all visual platform for professional networking, all using videos and pictures. So our goal is to make business networking fun again, where you can see your professional peers in action and they can see you in professional action. So you can share highlights from your job or your workspace or your commentary on the industry or your business tip of the day. All of this visual professional content in one app, all created by users. So that's Superstars. We worked 2 years on bootstrapping it to build the mobile app, and we launched it mid-February. And it's been great. We've seen about 1,000% growth in users in the 2.5-3 weeks we've been live. And we have over 400 active users now. Over half the users are Gen Z. And it's really cool. It's really clicking to see that it's really not just clicks with Gen Z, but it's also sticky with Gen X and older professionals and kind of across the spectrum. So maybe afterwards, I'd love to get your counsel on it, maybe see if you even be willing to give it a try. All of you, obviously, to give it a try. But we're really excited about what we built and to see it keep going forward.
You should send me a link and I'll post it in the newsletter as well.
Oh, okay. Yeah, I will do that. That's a good point.
Yes.
Let me.
So Lil is at work and she has a hard time actually coming on camera and introducing. So she said, I'll introduce myself in the chat. She's an actor producer based in New York City. She's also an investor on WeFunder, a crowdfunding private equity. So Kyle, speaking of investors, you're up next. Oh, there's Lil.
Sure. Yeah, Kyle Schefner. I'm an early stage investor for Quaker Capital Investments, which is a family office based in Pittsburgh. Yeah, so seed through Series A primarily, technology, disruptive startups, generalists. So basically all verticals.
Are you geography agnostic?
At this point, yes, but our network's primarily Northeast, so that's what we've invested in the past.
Oh, thank you. Tommy, are you motive?
Hi. Sorry about the stars. I'm traveling.
Really?
Yeah. Tell Alon I want to ride on one of those things too, Jeff.
That's the name of the game. So my name is Tommy Jenkins. I have a background in a little bit of finance, but a lot of startup community work with women's entrepreneurship, startup operations, engineering, and now I do natural language processing. I like deep learning, so I also like computer vision. I work for a sales CRM AI platform. However, I also have my own startup. I want to solve the dating app problem, and I want to do that with a type of explainable AI. So our mission is very different from most dating apps out there. And so our technology is and our interface is going to be very different. But I think there's a lot to do in the space, and it's a personal pet peeve of mine that I am solving. So thanks.
Oh, thank you. Mahul is here. People are starting to. Mahul, I know you're just coming into the room, but do you want to introduce yourself?
Sure. Yeah, my name is Mehul. I'm the founder of Diamond Hedge. It's an augmented reality diamond price comparison company. We have over $5 billion worth of diamonds on our platform. We've been growing around 100 30% year over year for the last 3 years. And yeah, you can change basically a carat size, diamond shape, ring setting, and then compare how much it would cost at all the major retailers all on one platform. And we've been featured in New York Times, Forbes, Glamour, Vogue, and a number of other publications as well. So yeah, that's what we do.
Thank you. So now Jeff Stewart, whom I've known forever, who is a serial founder and an investor. So Jeff, tell us about yourself and your background in the fund. And you still do angel investing as well, right?
I do from time to time. Yep. I'm trying to stay focused on our fund, but as you mentioned, Bonnie and I met. We call sort of Web 1.0 back
Yeah.
in called it multimedia, the world of multimedia. So I was a management consultant. Always knew I wanted to start companies, and had the benefit of, as part of a project, really dig into the internet and realize that it was going to change everything, and create a lot of startup opportunity in the same way that the PC had created lots of opportunity. So in the mid 90s, started a company that helped large corporations with their internet strategy, and then also actually coded and deployed internet-based systems. And our big secret competitive advantage as a startup is that we were the only people who both understood the World Wide Web and owned suits, because at that time there were not a lot of people. People who owned suits tended to have jobs, and if they had jobs, they didn't have time to go figure out what the internet was. And we pulled months of all-nighters to get to the point where people would pay us to help them with their internet strategy. Grew that business. Merged it with another business called Proxicom, which was venture-backed. Bought a third company called Ibis, and Proxicom eventually went public. Then started another business in New York called Mimeo, which was basically internet-enabled document production. So we would take digital documents from anywhere in the world and then physically produce them. Originally just at the FedEx hub, but over time through a network of owned and affiliated printers all over the world. That business grew and still going today. Then started a company that monitored the internet for hedge funds. That was a lot of fun. Launched a company, spent about 4 months selling satellite data to hedge funds, and then realized that business was too early. That was back before there was so many satellites up there. Launched a business that did behavioral assessment for recruiting for salespeople, basically for venture-backed, fast-growing sales organizations. We built algorithms to analyze the candidate, and then we had a methodology for better understanding the company to match them together. And this grew out of my frustration of growing and investing in companies where I saw that a lot of the investment dollars went to hiring salespeople that weren't the right salespeople. So I saw that a small improvement in that would make a large improvement in return on investment. All through this time was doing angel investing. And then launched a business that extended credit in emerging markets, basically by looking at the digital footprint on the phone, getting to understand who the potential borrower was, and looking at their digital footprint, their social footprint, and understanding their personality and behaviors in a way that we could essentially send money to strangers all over the world. And that business grew to operate in over 21 countries. All through this time, noticed that the U.S. market, when we had started our first company, Square Earth, companies went public all the time. There were hundreds of them that went public every year. They were venture backed, and in around 2000, that stopped, trickled down to a handful of companies. And what we were noticing as angels is, it was kind of frustrating. I was an investor in Airbnb, and I didn't even know if I was going to get any, I assumed I was going to make money, but I had no idea, years later, and you'd invest in these companies and you just have no idea whether you did a good job. and you'd have no liquidity associated with it. So that was frustrating as an angel. But then as a entrepreneur and as board member, you'd see these as you layered in more and more layers of preference and stayed private longer and longer, you got to a situation where you could have misaligned interest. You had a more brittle capital structure. It was harder to attract talent. It was harder to do acquisitions. So we had a very simple insight, which is why list in the US? Why not list in a top 10 global exchange somewhere else where they're hungry for US tech companies? And in 2017, we got on a plane, spent the better part of the year flying around to London and Singapore and Australia and Hong Kong and Toronto, really to understand those capital markets and particularly understand the institutional investors and their desire to own US tech companies, and realize that having the option to list earlier in a company's life cycle was a huge asset for the founding team and could be a powerful tailwind. So in 2018, we launched the Global Public Offering Fund and have been investing in companies generally in the sort of $100 to $500 million valuation range. And then as a shareholder, helping them have the option to list abroad so they have more flexibility. And so far that strategy has been working. We've gotten excellent, made some excellent investments. Our first one got bought by Salesforce as soon as they found out that it was going to go public in Australia. That was a North Carolina company called Map Anything. Our second company, Spire Global, which again was in the satellite data space. That company was getting ready to go public abroad, and because it was IPO ready, got approached by a SPAC. So that is public today on the New York Stock Exchange via SPAC. Our third investment, Fiscal Note, again, it's a global company. They monitor regulatory changes all over the world. Weren't thinking about going public. We got them on the path to get ready to go public. They had built a base of institutional investors in Asia Pacific. We're getting ready to list there. Again, got approached by a SPAC, and they'll be public on the NASDAQ. And then made another four investments since then. And what these companies have in common is they're not decacorns yet. The founders have said, let's go public and then become a decacorn, as opposed to wait, have a brittle capital structure, and be reliant on SoftBank and staying in their good graces, and have someone on the cap table who essentially wants to put more money to work, as opposed to investors that are eager to have the most diversity in investors and the most optionality for follow-on capital. So the strategy seems to be working. What I like is I still get to, roll up my sleeves and look at code as part of diligence. I still get to, dig into the spreadsheets. I still get to, interview people, and I still get to think about the business from an operator's perspective and sort of rely on my experience as an operator. But we also get to sort of think about the capital markets and think about how these companies we're investing in will not just do sort of 1-2 years out when they list, but how do you build a long-term investor base so that they're pulled into global indexes and essentially have access to permanent capital in the form of the public markets forever. So we're having a lot of fun with it. I'd say the other thing that's been a lot of fun is we've done in the various companies we've started. We've started companies outside the U.S. We've done a lot. We've bought companies outside the U.S. And this has, I think, probably given us an above average perspective on expanding a U.S. company in other countries. About half of our investor base are from outside the U.S. And we like to think that when we invest in a company, we can help them accelerate their revenue outside the U.S. as part of the value we bring to the table. And that's been a lot of fun. Doing business in faraway places for companies that have already built an incredible product, but haven't necessarily thought about the opportunity in a place like Colombia or Indonesia. But that can be very additive to a fast growing company. And we like being able to bring that to the table if we're doing our job right. So maybe that's a good place to pause. And I know Bonnie always has some provocative questions, so I'll sort of pause there.
I noticed that you mentioned you didn't mention Europe. You seem to be focused a lot on Asia et al.
Well, most of the world's population is in Asia, in those time zones, and it's growing very quickly, and they're in savings mode, as opposed to, so it's generally a young population. So yeah, I think in general, because there's so much opportunity, we probably think more about Asia Pacific than Europe. But I mean, I think the world's a big place and there's lots of opportunity everywhere. So what we're not fans of is ignoring Europe because there's more opportunity in Ohio, right? I mean, we think that a company that's on a path to being a decacorn at a certain point needs to start dedicating resources to having a global strategy. And I think especially in businesses that are data intensive, you get a bigger footprint, you get more data, you get more learning. And I know that when we were doing business, we did business in South Korea. Turns out South Korea is very for one of the companies I started. South Korea is very concerned about nation state actors because North Korea has, say, state level cyber attacks. So we hardened our software as a result of that. Then when banks in Mexico that we were working with, asked us about security, we could show them world-class security. We were distributing funds in Nigeria. It turns out that there's we'll call it industrial scale scamming operations there. And we developed technology to spot scams and distribute funds to the right person. And then when people in other parts of the world were like, well, how do we know that you're not going to get scammed? We pointed to our processes and procedures we had developed in Nigeria and rolled out globally. And again, it hardened our system. So we think that having a diverse set of customers in a world of software builds better companies. And we think that if you do the early Groupon strategy of just focusing on the US, you leave yourself open to other competitors who are thinking bigger.
Speaking of cybersecurity, I read an article that most of the companies who become unicorns are very, very, very successful, bake in cybersecurity from day one. And most founders don't even consider that until later. So we have two newcomers, two people, Jonas and Stephen. Do you want to introduce yourselves? And if you have any questions too. Stephen, Jonas? Oh, you're muted. Okay, Jonas, sorry.
Hi, thank you for letting me in. I'm Jonas. I'm living in Sweden, and I'm curious about your webinar here. So thank you for letting me in.
Welcome.
So, Stephen, you're welcome. Oh, and we have William as well. If you guys want to introduce yourselves and tell us what you're working on, briefly tell us what you're working on. And you're muted, William. I don't know.
Oh, I'm sorry about that.
Nope.
And I apologize for the lack of camera. My computer is having some technical issues, but nice to meet everyone. I joined a few minutes late, but really interesting sort of last.
So what are you working on? William, oh, he said he has technical issues.
Great.
And is Stephen still here? Oh, maybe he had to leave. Anyway, does anybody have any questions?
I do. Hey, Jeff.
Good to see you.
Nice to see you. So I have a dating app, and I'm really confident that I am solving my own problem. And I pretty much everyone I talk to who's still single, including angels, etc., they talk to me for like an hour about their problems with these dating apps. Okay. So I'm pretty confident that I will be solving, we're just building it now, people's problems. However, it's not, in terms of any type of funding, particularly, I think some of our models could generate revenue on their own, and I'm not super worried about funding, but certainly if I were to compete with Tinder, I would want to consider funding. I think it's a little bit difficult to have a dating app and like think about traditional funding. I've heard a lot of different types of fundings from people I know lately. I know a lot of the people that made some money with their dating apps, in the past several years have started SPACs. I think that I probably won't have a big problem if I want to ask for angel investment, because this is such a pervasive problem and no one is really attacking it. But I sort of, beyond that, I don't have any like concrete thoughts about what funding is like for a dating app, which is normally sort of like you make a UX change and there's a new dating app out, and that's a little trivial, right? So do you have any just general thoughts on the industry?
Yeah, I think Andrew Chen recently launched a book on the cold start problem. And I think he's done a really good job of articulating the issues of building a double-sided network, which is essentially a dating app is a double-sided network. And I think dating apps are, so we launched a lending operation where the community had to kind of vouch for each other. So that the social density and social referrals were a critical part of our application. So we got sort of real world experience with double-sided networks pretty early, and I was just really impressed with Andrew's book because he articulates these different problems, and I think if I was launching a dating app, I would use that table of contents as a sort of a strategy check. But I think the dating app problem further is. Oh, I was just gonna say, sorry, go ahead.
Oh, no. I was just saying, so I was always obsessed with like go-to-market and partnerships. So I'm hoping that I can show some traction with somebody and figure that part out. But do you think that changes the game in terms of investment? But please continue.
Well, I think the thing with dating apps is people tend not to want to date people in other cities or other countries.
Mm-hmm.
So it's an inherently local application. So I think the sort of the Uber model of we're going to hit Pittsburgh's our town, we're going to win Pittsburgh, and then we're going to go to Chicago, and then we're going to go to Palo Alto. I think in a dating app, if you can show that you can get traction in a city, in a geographic location, and then B, that the way you did that could be replicable, then I think you'll have all the money following you.
Really?
Yeah, but I think
I thought there's more of a bias, but
yeah, I mean, I think the what we're looking for, I mean, we're investing at sort of the $100 million valuation range where there's $10 million generally of revenue, so you can really dissect
outer
it.
Space.
Yeah, pardon me. Yeah.
I'm just kidding.
So at our point, there's plenty of data to dig into, but what I think all investors are looking for, is there a replicable way where if I put in $1, it turns into $2? So I think if you could show that, just through sheer force of will and creativity, you were able to get a critical mass in one location, and then show how there's a playbook. You don't have to prove that you can bring it to multiple locations, but I think the fact that you say, oh, well, we now have a playbook, then we can do this again. And here's how $1 in turns into $3 a customer. I think then you're very backable.
And SPACs are a better move for like larger companies, probably, right?
Well, we're actually we're having a whole discussion panel, which I'll get Bonnie the information and make sure we share it with everyone who's on the call. But the SPACs were, and we've now, we've been involved in 2 of them very heavily. SPACs were an answer to a problem in the US, which the US has 2 major problems. well, let me first say, it doesn't have a problem. If you're a $10 billion company, the US market is phenomenal. Deep pools of liquidity, lots of investors, well-regulated. At 10 billion, if you have a $10 billion company, I would highly encourage you to look at the NASDAQ and the New York Stock Exchange. The problem is we've put, with decimalization, Reg FD, Sarbanes-Oxley, a wide range of the elimination of research, because some brilliant New York politician thought the market would be better with less research. The US market doesn't support, small cap companies anymore. And it doesn't support them in two ways. One is it's enormously distracting and expensive to go public. And that's what SPACs address. The second problem is it doesn't support small cap companies. There aren't institutions in research that support it. So SPACs were a hack to get around that first problem. They don't solve the second problem. And what happens when you de-SPAC is you actually have all the wrong investors on your cap table at that point, because you've sort of the fast money SPAC. And what you want is long-term investors who see the vision of what you're building. Interestingly, Intel went public at a $57 million valuation. Salesforce and Oracle and Adobe were about $200 million valuations. So the US doesn't support that size company anymore. Our view on SPACs is we're not smart enough to know what the SPAC market looks like a year from now, and we don't like developing a strategy that has a giant unknown in it. That said, a given SPAC could be amazing. So a SPAC, every SPAC is a negotiated outcome. So if you have the right SPAC backers with the right structure, it can be a wonderful solution. But I like to say hope is not a strategy. So it's kind of it's kind of like starting your business and saying oh well we're gonna sell to IAC, right? Well they do buy a lot of dating apps, but you might not get along with their head of corporate development. They might be busy. They might say we're overexposed to dating apps. We're not investing in anymore. So that is a strategy. Yes, that's something you want to pursue as part of your options, but you don't want to necessarily have that as strategy. So that's our view on SPACs. We're hosting a more technical discussion with experts in the SPAC world and the cross-border listing world, and we'll share that. But I think the SPACs are generally looking for things that have some level of revenue traction or are in a super hot sector that people want to take big bets on.
Okay, I agree. Yeah, thank you. That's great insight.
Other questions?
Next question.
I'll jump in. Oh, sorry.
Sure, go ahead.
So Jeff, kind of similar to Tommy, I guess. So my startup is like a social media startup for professional networking. What we aim to create is the professional social network of the future. And I guess similar kind of question off of what Tommy had shared is, the cold start problem, right? Now, TikTok, Instagram, these companies have over 1 billion users. You come on, you're always going to see new content, and there's no shortage of users for those apps. And like an app like ours, similar to dating, it's about how can you get many users in the beginning to create I guess you could say a core base. So I guess my question to you is that, so we launched it 2.5 weeks ago. We're almost at 500 users now. And I guess my question is that what would you say from your VC hat is enough to say it's working, it's sticky, it's traction, and now it's ready for kind of like that venture to scale and really kind of scale the marketing resources to take this from 500 to 5,000 plus, then 50,000?
Great question. So first, and I guess this applies both to your business and Tommy's business. Is I believe Catalina Fake from the founder of Flickr said you want to hand greet your first 10,000 customers, and I think that's super important in when you're building a community, because you want the right people in the community and you want them happy and satisfied because they're going to, as new people join, they're going to be like, what is this community I'm joining? And I have a friend who launched a dating app, and it turns out that it became very popular in the recently released from prison community.
It's an interesting niche. Okay.
Yeah, and it turns, and he never really, they were never able to break that stigma, and it just kind of ruined the dating app early on. But as it relates to traction, I think that investors are smart now, and they know that a growing number of new accounts is insufficient. What they really want to see is people coming back and using it again and again. And in the case of the good news is you don't need to prove that there's a market for business social apps. LinkedIn has essentially proven that, and Microsoft has a pretty consistent strategy of buying things and then having them die. Look at Skype. So I think that market opportunity wise, you're in a good. You don't have to convince investors of that. But I think that there's a book, Jeffrey Moore's Crossing the Chasm, where he talks about sort of the early adopters and who's that passionate community. And I think if you can find that passionate community and really engage them and show that they're using it regularly, and then say, look, we've got, carpenters love this. Now we're going to, now we're going to get truck drivers or whatever it is. I think that, that you'll be able to attract investment.
To your point earlier, where you said you greet your first, 1,000 or 10,000 user handshake, what would that look like to you on a professional network? Is it following that? Is it trying to kind of like reach out individually by email or by, obviously I know that's not scalable, on a 10,000 level, but let's just say like the first 500. Is it that you actually say, would love any feedback? Do you offer them to say, we're looking to have people join our advisory board? And I'm curious, like what would give people an incentive to say, sure, like I'd give you my time, whatever it is. And maybe there's like, I don't know if the word is trick, because trick sounds bad, but maybe there's like some kind of thing, and say, we're putting together an advisory board of like 10 people. If you're willing to share feedback or kind of, do a one-on-one debrief, that's something that we're looking to add. I'm just kind of curious for your counsel on that one.
Well, one thing it depends on the community and what engages them and what's of interest to them. But one thing we did is we hosted physical events, and invited our members, out for free drinks and music and whatever, and get to meet each other. And we footed the bill, and it gave us maybe 100 people showed up. We had 50 people in our company in that city. So we get to interact with them and interview them and show that we feel they're important and listen to what they have to say. But also, it gave us a reason to engage with 500 more people who we invited. So in that case, we just did a physical event, but even small groups, one-on-one debriefs. Like, I don't think a Survey Monkey does the trick. I think you really need to open a dialogue and understand who's using it and why. And I think it also makes it easier to raise money because you can talk passionately about who your users are.
Good point. Cool. Thank you. That's such great feedback. Thank you.
My pleasure.
Jeff, I had a question as I was looking through your entrepreneurial story. Mimeo caught my eye. And in part because I think I've heard a few pitches actually that sound pretty similar to that business model with more recent startups over the last couple of years. And actually, it's sort of a theory I've been working on recently that like there are multiple markets in the startup space where like first mover advantage really doesn't matter at all. Like certain wells that you can come back to, and I think ticketing, for example, is a good example of that. Like, there's a lot of exits in that space, and I think, just because there's incumbents, I wouldn't write off that market. dating might be a good example of that too. Have you looked at, I mean, do you agree with that general theory, I guess, that there's
Yes, absolutely.
Yeah.
So one of our board members was on the board of a search engine company, and they had an ability to invest in Google, and their view was, search is over, we have Yahoo. So I think search was very out of favor when Google was growing, and I think at one point they had an offer to be bought for $1 million, and it fell
Yep.
through, and they're kind of
From
upset
Yahoo.
about that. So here, one of the most valuable companies in the world was essentially late to the game after the party was over. And I think we've mobile can be fundamentally different. I think look at Tinder. Tinder was Match had won it, like full set Match. Match was the dominant player, and Tinder said, "Hey, wait a minute, we can make this mobile first." And that fundamentally changed the experience. So I think just because people think there's no reason for innovation doesn't mean that there isn't. And then also I think that I had a coworker who started a company called Cloud Car, and it was about the same size as Uber at the time. Just like four or five people jamming out code. And his view was he's going to work with the taxi companies, but essentially provide an Uber-like experience, but working with the taxi companies. And what one of the things that I learned from that is that little things that make a huge difference. An Uber is not, we've had taxis for decades. They were the incumbent, but little things like being able to, close the door and walk away without the friction of paying. Like no one was saying, "Oh, it's so inconvenient that I have to spend almost 22 seconds paying." No one's thinking like this is this giant burden. But once you stop spending 22 seconds to process your payment, that 22 seconds becomes intolerable. You're like, "Oh my God, I can't believe the old days where I actually had to pay when I got out of a taxi." Like that, So I think there's lots of opportunities to introduce things that people didn't know they needed. I know that when the founder of Sony wanted people to use the Walkman, everyone's like, "No, people want bigger." What are you talking about? People want bigger radios, not smaller radios. So I don't think that just because there are well-entrenched incumbents that there is an opportunity for a driven founder.
Yeah, that's great. There's lots of catalysts out there.
Look at Zoom.
Yeah.
I've been using Zoom for a couple of years, and all of a sudden, after when the lockdown started, everybody was talking about Zoom. I'm like, it's been around for a while, and everybody thought it was brand new. Time and circumstances. Never underestimate time and circumstances.
Well, I think Bill Gross, who I have an enormous amount of admiration for, because he's one of the few people who has consistently started multiple companies in parallel. He started his incubator, his lab, as Idea Lab, because he thought it was all about the idea.
With Howard.
Yeah, with Howard, and then over time he said, well, actually it's the people. But since then there's a great YouTube video on this. Maybe it's a TED Talk. He says it's timing, and I think that timing is a hugely important part of it. And like I said, I have a lot of admiration. He says timing's the most important part. I personally, I have had lots of ideas that were way ahead of their time. I've been thinking 3D printing was going to be in every home since probably 1990. So, and it still isn't. So, it's just hard to predict the timing on these things. But I remember with Lendo is FinTech, And people saying, well, VCs were saying like, well, is that really an industry? Like, can you make money in FinTech? Like, and I just, now FinTech is everywhere. And I think people understand that it's a huge part of the global economy, but it just wasn't, from an investor standpoint, people hadn't woken up to it. 6 Degrees was essentially Facebook, but because phones didn't have cameras, you didn't have that face experience, and it was just too early. Also, the types of databases needed to support those massive graphs weren't available yet. I started a company that monitored the internet in real time pre-cloud. So we had hundreds of servers we had to maintain and modify. Today, you do that with a cloud. And there's a company that started a couple years after us. It's now valued over $1 billion. So basically the same company, same technology, except they have cloud and can just iterate much faster as a result of it, and have a much lower cost structure. So they're able to get the traction and execute in a case where we couldn't, because our infrastructure was just too early, too brittle. So yeah, timing matters.
Next question. I wanted to comment on something you said, because I know that you were early in on the Web 1.0 days, and you were helping companies to figure out their internet strategies and how to get online and blah, blah, blah. And this is what we're seeing right now with the blockchain. It's amazing how many people are, you can take lessons in blockchain, and it's the same. We've read this book before. And I'm sure you've noticed that everybody all of a sudden is a blockchain expert and teaching blockchain.
Yeah, I mean, I see a lot of parallels to blockchain and crypto to sort of the internet, 1.0. I look at the interfaces. I look at the user experience, and and even the performance and complexity. It reminds me a lot of sort of the dial-up modem internet. And people. If you had downloaded video and watched something and then said someday there's going to be Netflix, most people would have said, you're crazy, because exponential improvements are very hard for the brain to understand. And what we've had over the last couple of years and what we're having right now is exponential improvement in crypto. If I was starting my first startup right now, I'd probably be spending all my time on crypto. I had a call this morning at 5 a.m. with a team that's in Europe today, and like the things they're doing would have been impossible 6 months ago. It's a DAO, so super exciting. And I think that what people don't realize is smartphones are shipping with the hardware to have a digital wallet in it. They've got segmented memory. There's no interface to use that, but essentially, we're getting about 1 billion wallets a year, being shipped. Once someone figures out how to build the right interface on that, we're going to be walking around with a bank in our pocket. And I've been quoted as saying, the average 16-year-old has more computing power in their pocket than Citibank had in 1985. I think that's had huge ramifications for FinTech. Once people unlock the self-custody wallets that are in our phones through better interface and software, it's going to be transformative. So I'm very bullish on the potential here.
I'm working with a company that does have a very user-friendly interface. They're addressing that exact problem. Not only that, but that the average 16-year-old has more computing power in his or her wallet, on his or her phone, than the NASA, the first rocket ship to the moon. This is mind-boggling. So next question, because I'm going to ask a question, but it's your platform. So anybody have a question? the metaverse. We are still years away from it being anything truly viable and real, and that's going to imitate reality. And I did see that Apple now has contact lenses that's going to immerse you in the metaverse. I'm sure you saw that as well. I'm sure you were aware of that as well. So that, you're not going to walk around looking like a glass hole, which was the case when Google Explorer first showed up. Comments on that? Because I know you always look into the future.
Yeah, I think the I think that augmented reality is probably the gateway to metaverse. So the AR to me is super interesting, and I say that because at Mimeo, we were doing tens of millions of dollars in the corporate training space, and corporations have a big incentive. There's a big incentive to make sure the person who's maintaining your jet engine knows how to maintain the jet engine, and it turns out that cost of training is no object there. It's really, is the training effective? And there's lots of safety and compliance and just tons of roles where training really matters in business. And there we got some early exposure to AR, and I'm very bullish on the potential there. I'm not. I don't feel like I have a good sense of how fast this is going to happen. I know there's a lot of smart people, spending their time on it, but and I do know also that there's a bit of a gold rush right now, where you have a land grab, if you will. You have big organizations dedicating meaningful research, meaningful dollars to it. So when you have sort of these Coca-Colas and UPSs of the world spending billions of dollars, something's going to come out of that. And of course, the startups, critically important.
So, question. Anybody have a question or comment?
Jeff, you are invested in a number of different blockchain-related startups.
No, actually. So our fund is focused on sort of the $100 to $500 million valuation range, and I think that the companies doing crypto tend to shoot through those valuations pretty fast. So they're either too early for us to invest out of our fund, or too big. And now I did try to invest in Coinbase before they did their $100 million round, and we were still forming the fund and just quite frankly couldn't assemble the capital. But our view was although at the time small, going to go into the public market and become an important, valuable company. But we were still pulling together capital at the time. I've talked to, it's really, I think really hard to find companies in that $100 to $500 million valuation range in crypto. As far as projects, I would look at my personal investments more as R&D than true investments. Right? I think that it's just moving so fast. You need to have exposure to it. You need to be in these projects. You need to be playing around with it, just to understand what's happening, because it's evolving so quickly, and it's gonna affect every industry in the same way that the mobile phone has affected every industry, in the same way that the PC has affected every industry, and in the way that the internet has affected every industry. The question is, how quickly will it affect which industries? That's why you have to keep an eye on it, because it's hard to tell. So, I think, the internet is just now starting to affect elements in the insurance industry, in the real estate industry, in the construction industry. So, I think crypto will be the same way. There'll be certain industries that will be changed very quickly, and other ones that 20 years from now someone will be saying, like, why aren't we why aren't we using crypto here?
And we'll still be talking about it in 20 years, I'm sure, trying to figure out what's next.
Oh, that's when
Yeah.
a lot of industries will start to jump into it. It takes time, and it's been way more than 20 years. Jeff
But
Bezos was the laughing stock of tech. He was when he first launched Amazon. Nobody was going to put their credit card online. Nobody. Still hand it to a total stranger at a restaurant, but nobody. But it happened. I think he's doing pretty well these days.
Yeah, and I think that the internet, again, to do the analogy, back then there was TCP/IP, and you'd talk about ArcNet, and there were these things that were core to the discussion that now have just kind of gone into the background as plumbing. And I think the same will happen. I don't know if it's blockchain or crypto or smart contracts, but those terms will just kind of just be like, in the background, and we won't be thinking about them. I don't know which terms, but there will be terms that now are pretty critical to the discussion that will just be assumed.
And the user interface is critical. When I was first online, I was working from a C prompt, but Netscape came along with a beautiful browser and changed everything. Everything.
Yep.
And other companies jumped on board. So I think it still is early days, and the barrier to entry, because it's not user friendly, is still high. But what do you think about all these companies buying up all this real estate, all this meta real estate, and spending a lot of money on it?
I do think it's early days. So I don't think we have an opinion on any specific metaverse purchase.
Oh, I wasn't asking for any specifics. I was just asking for general.
Yeah. Well, this ties back to what I was saying before. There are big corporations who are spending money to get into this, or hedging. To some degree, it's a hedge. To some degree, it's a publicity stunt. To some degree, it's making sure that they But I remember early on with the internet, we were talking to a big well-known Fortune 50 company, and they're like, hey, what should our strategy be with the internet for getting customers? And I was like, well, at the time there were 27 million people on the internet. I said, well, you're not, use it to talk to your regular customers and the media about how innovative you are. You're not going to get any customers on the internet because there are no customers on the internet. Like, you have more customers walk through your stores every day than are on the entire global internet. So, you're doing this as something to talk about with offline. And I think to some degree, that's where some of these corporations are, where they need to be doing something in the metaverse so that they can start getting familiar with it, but also so that they can show that they've got a strategy for it.
Next question. Does anybody have a question? No? So Jeff, are you at all tempted to start another business? I know that you're busy with your fund, but every now and then you go and start another business. What would you do?
I keep a list of about 35 ideas that I think would be wonderful businesses. But I'm really enjoying investing, and I think it's all consuming. What I'm interested in, though, is there are people like Bill Gross, like Edison, who have figured out how to start multiple important companies at the same time. And I've always been fascinated because it's every time I've tried to start more than one company at the same time, one just becomes all consuming. And looking at other teams and companies who started multiple companies, again, it seemed like one ended up consuming all their energy. So for us, the GPO fund is all our energy. Like, there's always more founders we could be helping and looking at for potential investment. There's always things we could be doing to help our portfolio company. There's always new things we can be learning about that help us become better investors or spot better opportunities. So I don't think that starting a company while running a fast growing fund is an option. That said, there's so much opportunity out there, and starting a company is a lot of fun.
So you wouldn't think of doing, and I know that incubators take a lot of time, and I know that you know so many people at this point, you would know how to put together a great team, but I guess you're just focused.
Yeah, I think we have to be. So one of the questions that came up was asking about portfolio construction and our portfolio.
Yeah.
So we've made 7 investments in our main fund, one of which is exited to Salesforce. So right now we have 6 positions. In a week or so, that should expand to 7. That 7th will be our second investment of 2022. Our plan is to make about 6 investments in 2022, which should bring our total to the 6 plus the 6 that we've already made. Should bring us to 11 positions. When we invest, the companies are private. We like to hold them after they go public. We think that we're picking really good companies that have years of growth ahead of them and should get a tailwind from being listed. And we get to know the companies really well while they're private, which we think gives us a good position to understand them for the first couple of years they're public. From a portfolio construction standpoint, we think that at scale, our fund will be 20 to 30 positions, all of which we entered as private. Probably about half of them would be public and half of them would be private at any given time. And then as they get more mature and have been sort of in the public markets long enough that they're included in indexes or that they've been properly priced by the market, which can take a couple of years, we would probably exit those positions and then recirculate that capital. So that's our plan is 20 to 30 concentrated positions in companies that we know really, really well, that are all led by amazing founders, have big visions and want to build big, important companies that have years of growth ahead of them. So that's a good question.
I can't remember who said it, but the statement was, I'd rather have an A team with a B idea than a B team with an A idea. What do you look for?
So we're looking for outliers. We're looking for the Larry Ellison and team, the Mark Benioff and team. People who are have a desire to build something big, but also we're technologists. I used to code. My business partner or co-founder Key was a world expert on data and advertising infrastructure, and really can get deep down into the weeds. So we look for a team that loves technology and understands its potential to not as a cost center, but as a strategic tool to dominate a new category. So that's what we look for.
And I'm sure you're heavily focused on the data element as well.
We do tend to because we've started 2 AI companies. I think we put a high value on the data side of it, and those companies and Key's background also, we're very data intensive. We invested in Fiscal Note, which essentially is gathering data and analyzing data related to proposed regulatory changes. Their vision is to know about every proposed regulation everywhere in the world.
Wow.
So it used to be you could just meet, if you had a mid-sized company or a large company, you could meet with your lobbyist once or twice a year and know what was going on. Now you could be, there could be regulations coming out of Brussels or out of California that affect you, and you could be in the energy business, but it's a privacy regulation. I mean, it's gotten to the point where you need AI, you need tools to stay on top of regulation that could affect your business or affect your customers. And unfortunately, we think that there's a bull market in red tape, and we see more red tape in the future rather than less. So by investing in Fiscal Note, we think that we've hedged against it, and are in that company, I think, is going to be a decacorn, and it's going to be a really important piece of global infrastructure. Unless, because like I said, I think we're going to see more regulations, not less, globally. So that's a data one. Another one that was data intensive to us is we invested in a company called Spire Global. They have a fleet of over 100 satellites they've launched that monitor the Earth in radio spectrum. So, massive amounts of data. And they've got one of the biggest fleets of these are satellites about this big, so microsatellites. They've got one of the biggest fleets of satellites in the world. And I think a lot of people were looking at it and saying, oh, I don't understand space hardware. And we looked at it and said, this is a data company. Like they've got the hardware up there now. That part is normal operations for them. Now it's about selling the data that they're generating. And it turns out that there's lots of things that give off radio signals, and there's lots of things that interact with radio signals, like weather, like soil, moisture, and they've got years and years of growth ahead of them, repackaging and augmenting this data and selling it to people who can benefit from a better understanding of what's going on in the world. So again, another data example. So yes, Bonnie, data to us is an important part of where we think we can get an edge on understanding a business.
So are you worried about all those little satellites bumping into Elon Musk's tens and tens of thousands of satellites that he's launched for Starlink?
No, they're small. They're low altitudes. I think, and also the life expectancy of those low altitude satellites is a couple years, and then they burn up, and they're kind of, quite frankly, like Bic lighters. They're kind of a little disposable. This is, the old model of spending $150 million per satellite with a 10-year development cycle is now changed. I mean, there are companies like Spire Global who can launch satellites, or can just basically hitch a ride with whatever rocket's going up and get satellites from the drafting board to space in months, at costs of, at 6- and 7-figure digit costs. So it's a complete game changer, just like the cell phone is fundamentally different than the mainframe. I have a question for Jonas. I'm always interested in the startup scene in Europe and how it's evolving quickly. I'd love to get Jonas's perspective from what he's seeing.
What kind of perspective from Europe?
Yeah, and because what you're seeing in the startup community there, and how you see it changing.
Yeah, because I'm like a startup as well. I started my own company 4 years ago, a leadership training program, but I'm using IA to monitoring your stress level internal, because I want to teach people to take decisions from inside to outside, and learn how to communicate with the language of the brain, the thoughts, and the language of the body, the feelings. And when I just get around the networking, and some of my friends are investors, and some of them are startups as well. So I see the health specter is in Europe, and also into the sport industry, go into the corporate world as well. So, I mean, we were 4 years ago, we were the first company who actually offered 5 separate tools within the same concept. So we were staying at the castle. We had a real world champion, and we had the IA monitoring stress monitoring tool, and we had martial art and mental training at the same time to the corporate leaders. So I could see that the combination that you said, the value bringing into is more important within Europe that I'm most into. And that's why I'm curious about the States perspective. Like, that's why I joining the Kettle Space breakfast and morning shows, and to improve my English, but also to learn more from the other side of the world. Thank you.
Well, Jeff was asking about your side. What's going on in your side of the pond generally?
Yeah. Like I told, in Europe, I can see the health sector, the monitoring, the IA function and machine learning. But the health sector, because we're struggling with the stress here in Europe. And that's why I started my own company 4 years ago to actually eliminate all unnecessary stress. So I use the IA technique.
Oh, interesting. That's great. I think one thing I've noticed is it used to be that an idea would slowly migrate out of the echo chamber of Silicon Valley, and I think now ideas are emerging from everywhere, but they're also traveling very quickly. So you can have extremely sophisticated conversations with people all over the world, where I used to have to really just hang out in Silicon Valley to have those level of sophistication, conversations with that level of sophistication. So I'm very bullish on entrepreneurship globally.
Oh yeah, I'm really loving that too. And I see here in Sweden, we start a lot of accelerator and incubators, and also a lot more angel investors, and also like investors who goes together to make it a bigger impact. And like one of my friends, he is like only investing in like good company who is like using like the green or supporting the global development goals. So he only invests in that one. So like green investments he talking about. So that's I see here in Sweden, because they say in Sweden like we are the most sustainable country in the world.
Great. Yeah, and we launched years ago a carbon offset business. So we got a lot of exposure on the climate side early on, and then with Lendo, we were it was touching. It was essentially a financial inclusion business, which again touched a lot of ESG goals. We actually had Piero Midiar's fund was one of our backers. So we've been kind of embedded in ESG for years, and I think you have two things happening right now. One is you have investors waking up and saying, "Wow, you can get like better sustainable companies are better companies because they're building systems and they're thinking in systems view, and they're have better retention and they have more enduring brands, and it's just better business." And I think in parallel you have sort of this fad of oh, that's the new shiny thing. I need something new and shiny to talk about. So it's a shame that the two are getting sort of smushed together at the same time. But it's definitely, especially when we talk to our European investors, it's a big topic, ESG in general.
Oh yeah. The greenwashing was a huge challenge when I met Jakob Trollbäck, who designed the communication language with in the design of the Sustainable Development Goals. And he was also pointing like a lot of company just greenwashed all the goals, and they didn't do what they talking about. So it's more talk than do. And nowadays, I mean, we designed our company as a sustainable company as well. So we offer training camps for leaders in the corporate world, but also 20%, 10% goes to the planet, that we plant trees, and the 10% goes to education and train the next generation. So we are out in the schools between our training camps. So we had that as a sustainable concept from the beginning, to give back. Otherwise, we couldn't have any long-term company. And then I met one of the inventors of the Googles and the ski helmets, POC, Stefan, and he started a new sustainable company that's called Cake Ride. And I asked him when I went to Iceland if his bikes were in Iceland, and he said not yet. But he also has like his sustainable company, so you can buy electrician motorbike, but also you can buy a sustainable package if you like it. Then you buy 2 bikes, and one of them shipped down to South Africa's wildlife workers, so they go on sunshine sustainably. So it's a lot of sustainable partnering up. That's I believe here in Europe as well.
Makes sense. But Bonnie, is this what you wanted to cover? Or are you anything else, or is this in line with what you'd hoped?
Yes, and I thank you. In fact, Lil asked if she could reach out to you on LinkedIn. I didn't know if you wanted to share your LinkedIn.
Sure,
Link in the chat.
I'll put that in the chat right now.
Or your email, but they could reach out to me, and I can give your email if you want me to share it with them.
Yeah, absolutely. Here, I'll share that now. Second here.
And I thank you for your time, because I know you're always on the road. That's why I always ask which city or town you're in presently.
Yep. Yeah, so was in New York yesterday. It was in Florida the 2 days before. Really impressive startup scene down there. It's been growing, and think that it's inspiring to see how much it's changed over the last 4 or 5 years.
Yes. Are you spending more time in Miami or Tampa? Because the 2 cities, their focus are very different.
Miami.
Oh, really?
Yeah, and for us, we have investors in our fund that are from Miami, so that turns out it's a big, in the family office world, it's a big hub, just like Switzerland and New York.
Of course. Well, now Miami.
Yeah, exactly. Well, it's also kind of the capital of Latin America.
That's true too.
So. I was surprised that when we were doing business in Mexico, Colombia, and Brazil, and Peru, and they none of them wanted to visit each other. It's like, let's meet in Miami.
Really?
Yeah. So I think it's just logistically, I don't know. So it's kind of a place everyone's willing. In my experience, it's a place everyone's willing to meet in.
Are you still heavily focused on LATAM?
Well, from the companies we invest in, we say North American. The reality is we tend to have more of an edge diligencing and sourcing U.S. companies. Not opposed to Canadian and Mexican companies, but really U.S. Delaware C Corps is what we're generally investing in. And then once we invest, we want to, hopefully we're helping them expand globally. So far, that's mainly been Asia Pacific, is where we've probably added the most, and Canada, where we've added the most value. So we haven't been doing much in Latin America with our current portfolio, but that could change. One investment that could change very suddenly.
So when you are investing offshore, are you still asking or requiring that they establish a Delaware C corp?
Well, no, just to be clear, we're generally investing in U.S. companies.
Okay.
What we might, if the founder wanted us to, we might weigh in on their Brazil strategy or their Peru strategy, or who to partner with in Malaysia, and we have investors that do business or live in these places, and what surprised me. I'm from New Jersey, so I get approached to do a joint venture in South Korea. I'm like, what am I doing in South Korea? And I talked to one of our investors who was based out of Singapore, and he walked me through how to do a joint venture in South Korea. He said, you need a financial investor who owns 10%. That'll solve a lot of problems. I can be that financial investor, but it's better to have a Korean. Here's 3 Korean investors I've worked with. I'm happy to introduce you. Here's a law firm we use. Here's another law firm. There's now a joint venture in South Korea. Same thing when I went to Indonesia. I'd been to Bali, but I'd never done business in Indonesia. And one of my investors in that company, who was based in the Philippines, he's like, "Oh yeah, I think I own an oil refinery with one of the families there. Let me make some calls." And and I land, and I'm talking to the right people. It's still if I had just gone to Jakarta and try to figure out who should I be doing business with, I could have been there for 6 months before I was meeting with the right people. And by having international investors, they just kind of help you navigate and bring special expertise, cultural expertise. So we're a big fan of getting investors on your cap table who are global earlier in the life cycle of the company. And I like to think when you get us, GPO Fund, on the cap table, we're bringing with us a group of international investors who are willing to roll up their sleeves and help if needed.
It's all about networking and having the right connection. So one last question, New Jersey, which exit?
4. Does that even count as New Jersey if you're from New York Metro? I don't know.
That still counts as New Jersey. Or as I like to call it, mythic New Jersey. Exit 9. So thank you so much. Sorry about the muck up with the link this morning and the intimate group we've gathered today, but that's okay. Did you want to put your Oh, there you did put that. Thank you so much, Jeff.
Did I put that in there?
Yes, you did. I just saw it. I'm sorry. So anybody have one last question, or Jeff, do you have any last advice to founders before we end the session?
Well, the best advice I ever got was a guy, my friend's father was an entrepreneur, and one day he was sitting on the edge of his golf course where his house was, and just relaxing, and I asked him, I said, I want to be an entrepreneur. I was probably 14 at the time. And he said, I said, do you have anything you would have done differently? And he says, I just wish I'd done it sooner. So that to me, I think was good advice. You guys are all beyond that stage. But the second thing he told me is probably about a year later, he told me about losing his biggest client. And he went up and drove 2 hours to go visit him and said, I need to talk to you about losing this account. This is going to, you're a really important client. I'm, sorry to lose you, but I need to talk to you about it. It's going to take about an hour. And the guy said, well, I only have 20 minutes. And the guy goes, well, no, I've got to come back. And he stood firm on requiring an hour. And the guy, ended up giving him an hour, and he ended up saving the account and saving his company. So I think that every great business that I've ever invested in had a point where it was, one conversation away from not existing. And I think, I look at every investment where I've made more than 10 times my money. There was a day where, you could have called me and said, would you sell me that investment for $1? And I said, oh, good. I can finally take the tax loss because this is going nowhere. So, I think it's a bumpy ride, but, having done it a bunch of times now, I'm hugely excited and kind of jealous of entrepreneurs who are building businesses, because it's a different level of intensity than investing. I'm having fun investing, but wish you guys all lots of luck with the business. Excited for you.
Thank you so much.
Great.
We appreciate your time. Thank you, everybody. And I'm glad we sorted out the link, and we'll be back in 2 weeks with our next investor breakfast.
Great. Bye-bye.
Have a great day, everybody. Thank you.
Cheers.
Bonnie.
And Bonnie, I sent you an email as well. I just want to make sure you saw the email that I sent you.
Okay, you know, it's always better if you go to the SOS website and do a post to the list.
Oh, okay. All right. That's better than emailing you direct. Okay.
Yes,
All right.
thank you. And good to literally see you, Lil. Bye, everybody.